So let's continue with the topic called total income. This you need to watch immediately after watching basic concepts. So the revision video I have already uploaded on the YouTube. So you can see in my YouTube channel, caramharsha playlist, you go income tax marathon or income tax revision, you will find something, getting it, a folder. So inside that, all these videos I am uploading, which I am uploading on November 6th, getting it, 6th and 7th of November 2023, I'm uploading all these videos, getting it now. So this is now we are going to discuss about alternate minimum tax 115 JEE, and along with this, in the same video, I am also going to discuss about tax payable, the option to pay income tax at concessional rates. That's called 115 BAC. Now I hope you have gone through salaries chapter, you have gone through tax computation, the introduction chapter, or you might have gone through PGBP, or you might have gone through chapter 6 deductions, or you might have gone through set off and carry forward chapter. Everywhere, when the question is given, a practical question, at the end of this question, assume that SSE has not opted for 115 BAC. Or you may be finding, assume that SSE has opted for 115 BAC. Any of these two words you will find. Now, accordingly, if the SSE has not chosen, this optional tax rate option, the computation of income, the rules will be different. Tax computation rules will be different. Like in the first chapter, we have seen basic exemption 2.5, 2.5 to 5, 5%, 5 to 10, 20%, beyond 10, 30%. Yes or no? Senior citizen up to 3 lakhs, super senior up to 5 lakhs, tax is 0. That and all will not apply if the SSE has chosen 115 BAC. Getting it? Anyhow, 115 BAC, I'll come back to it later. First, let me focus on 115 JEE, alternate minimum tax. One important point, if the SSE is paying tax under 115 BAC method, if the SSE has chosen optional tax regime, getting it, 115 BAC, AMT provision will not apply. Remember this point. If 115 BAC is chosen, AMT provision itself will not apply. Now, what is this AMT provision? I have made a beautiful, simple notes. Last minute, you can take a simple screenshot of it and then keep it. Don't write anything. It will be time waste. Just focus on listening. Now, what is this AMT? When this AMT is applicable, I will explain entire provision through this particular revision. Getting it? Now, is the SSE, did he claim deduction under section 35 AD 10 AA chapter 6A heading C? If the answer is yes, 115 JEE AMT provision is applicable. If the SSE has claimed 35 AD under PGBP investment based deduction, 100% of the capital expenditure will be allowed as deduction for specified businesses, 14 specified businesses. 10 AA, if a person has established any manufacturing unit or providing any services from special economic zone where he has commenced operations on or before 31st March 2020, or he got approval before 31st March 2020 but started operations on or before 31st March 2021, approval was before 2020 but started before 2021 or started before 2020 directly, that fellow, first 5 years, whatever exports he is making of the articles of goods or services, whatever exports, related profit, 100% deduction. This is for first 5 years. 6th year to 10th year, 50% of the export profit is deductible. First year to 5th year, 100% of the export profit. 6th year to 10th year, 50% of the export profit you can claim deduction under 10 AA. 11th to 15th year also under 10 AA, 50% of the export profit you can claim deduction subject to investment reserve. Subject to creating an investment reserve, special economic zone reinvestment reserve. Once you create that reserve, you can claim from 11th to 15th year also deduction, provided you create reserve equal amount. Whatever exemption you are claiming, suppose 11th year your profit is some 10 crore. 50% you can claim deduction, 5 crore. If you want to claim 5 crore deduction, for 5 crore, transfer to reserve account. Then you claim deduction. That reserve, you should utilize it within 3 years from the date of creation. Getting the point? So from the date, just a minute. So from the date of creating the reserve, within 3 years, you must utilize that reserve for purchasing new plant and machinery and all. Then under 10 AA, first 5 years, 100% of the profit is exempted, no condition, reserve and all does not apply. Next 5 years, 50% of the profit is exempted. Which profit? Not total profit. Export profit only exempted. Export profit only you can claim deduction. First 5 years, 100% of export profit. Next 5 years, 50% of the export profit. Third set of 5 years, 11th to 15th year, 50% of the export profit subject to investment in the reserve, subject to creation of reinvestment reserve. Whereas for first 10 years, no, 5 years, 100%. Another 5 years, 50% of the export profit. Here, deduction you can claim without any condition of creation of reserve. Then chapter 6A heading C, like 80 IA series, 80 JJAA, 80 QQB, 80 RRB, these deductions. If the SSE is claiming deduction under 80 chapter 6A heading C, income based deductions. So if the SSE is claiming 35AD, 10AA, chapter 6A heading C, for him 115 JEE, AMT provision is applicable. Remember, SSE means anybody other than company. Other than company. For companies and all, this provision is applicable. Just a minute. Yeah. So this provision is applicable for any person other than for company. For company, 115 JB provision is there. Separate provision. For company related taxation at CA Inter, we don't have. At CA Inter, we only have individual partnership firm taxation. Getting it? So if the any person who claimed deduction under these provisions, whatever I have told here, getting it, for him, AMT provision is applicable. Now, okay, if AMT is applicable, what should I do? Very simple. You have to compute adjusted total income. What? You have to compute adjusted total income. Very simple. In the question, no. Did they give any information? SSE claim a deduction under these sections? Yes, sir, they gave. Very simple. 115 JE is applicable. Okay, what should I do? Compute adjusted total income. How to compute? In exam, they may give you total income. They may give you total income. To that total income, add back 10 AA deduction if there. 10 AA is not there. 35 AA deduction is there. Then add back. Both of these are not there. 80 IA, 80 JJ, 80 QQB, RRB. Chapter 6A heading C based deduction is claimed by the SSE. For computing this total income, he claimed already. Add back that. Either this or this or this, any of these only will come. Any one only will come generally. If SSE claimed 10 AA, 35 AD will not be there. If SSE claimed 35 AD, 80 JJ, QQB, 80 IA, these are all will not be there. These are all mutually exclusive. If the SSE claimed any of these, while calculating total income, add back to that. Now, if the SSE who has claimed 35 AD, you added back, right? Now, calculate depreciation and reduce. Calculate depreciation and reduce, because when the SSE is claiming 35 AD deduction for computing this total income, he has not claimed depreciation. Directly 35 AD deduction he claimed for capital expenditure. So add back that capital expenditure, which means you did not claim any depreciation, and deduction also added back. So now you claim depreciation. If at all 35 AD you are adding back, this point will come. Suppose you are adding back 10 AA deduction, this will not come. You are adding back 80 IA, 80, all this will not come. Able to understand? So very simple. Add back these items less depreciation under section 32. You will have adjusted total income. Very simple. Remember this format. Don't do so much of interpretation and all. Very simple. Whatever total income is there, add back this. You will have adjusted total income. Suppose if this adjusted total income is more than 20 lakh rupee. More than how much? 20 lakh rupee. Then flat 18.5% tax rate you apply. On this adjusted total income, 18.5% flat tax rate apply. So you will compute some tax. On that apply surcharge. At what rate? If this total income is more than 50 lakhs, adjusted total income is more than 50 but not exceeding 1 crore, 10% surcharge. If the adjusted total income is more than 1 crore but not exceeding 2 crore, 15%. If the adjusted total income is more than 2 but not 5, 25%. Otherwise 37%. So depending on that logic only, very simple. So 18.5 plus surcharge, which may be 10, which may be 15, which may be 25, which may be 37, whatever adds us, you will have AMT. This is called alternate minimum tax. Nothing but the minimum amount of tax which you must pay to the income tax department at any cost. Sir, whatever the deduction I'm claiming, you are adding it back. No, what is the purpose of then these deductions? You are again adding back and giving me, department is collecting tax. What is the purpose of then 35 AD, 10A, all this? No, useless, huh? No. What department is saying is, suppose, see, generally, you compute regular by applying 35 AD, 10 AA, whatever is applicable, you compute total income. Getting the point? So on that you compute tax, and that's called regular tax payable. What is it called as? Tax computed under regular method. That is called normal. So normal, whatever provisions that were given under income tax law. So you calculate a turnover from that, whatever deductions that you are eligible, you reduce the deductions, you calculate a total income on that, whatever tax you computed, that is called regular tax payable. This regular tax payable also should be basic tax plus surcharge plus cess, everything. So regular tax. Now suppose Now by applying AMT, whatever I have told, by applying 115 JEE, you computed some other tax also, right? That's called alternate minimum tax. If alternate minimum tax is more than regular tax payable, then you must pay income tax department AMT by challan. So pay by challan, file IT return. This much amount you must pay because your regular tax amount is 0 or just some 10 lakhs. Some amount is there, but AMT is some 50 lakhs amount is there. So you must pay AMT. Now immediately you felt this, sir. When I'm paying alternate minimum tax, when I'm adding back all the deductions, 10AA, everything, when I'm adding, what is the purpose of claiming all these deductions? What is there is no use because of these deductions, because at the end of the day, again, you are adding back and collecting tax from me in the name of alternate minimum tax. Wait, whatever AMT you pay, no, minus. Regularly, how much you have to pay tax? If at all 115 JEE is not at all there, what is your regular tax payable? 10 lakhs. What is the AMT? 35 lakhs. The excess amount, 25 lakh rupee, I will call it as AMT credit. Okay, what should I do? Forward it for 15 years. Carry forward it for 15 years. What should I do by carry forwarding? In the second year, suppose year one. Suppose in year 1, AMT you calculated 35 lakhs, but regularly if I calculate only 10 lakhs is the tax. So 35 lakh you pay to the department at the end of the day, because this is a minimum tax that you have to pay as per 115 JEE. The minimum tax amount comes 35 lakhs, so you have to pay that by cash. You cannot claim any exemption on that. That's a minimum tax you have to pay. Now, sir, I paid 35 lakhs AMT, sir. Regularly, if I calculate only 10 lakhs, sir. So I paid excess amount of 25 lakhs. Whatever the excess amount of tax you paid because of 115 JEE provision, that excess amount is called as AMT credit, which you can carry forward for 15 years. Now, I'll carry forward for next 15 years. In this year 1 I claimed, year 1 I paid 35. Sorry, year 1 I paid 35 lakhs. 25 lakhs extra I paid. This 25 lakhs I can carry forward from year 2 to year 16. Yes or no? So year 2 to year 16. Oh, what should I do? Now in year 2 to year 16, no. Year 2 to year 16, no. Let us assume year 2. In year 2, if you see, again in year 2 also you have total income. Again you claimed some deductions, whatever. Your AMT tax is 20 lakhs. Whereas in that year 2, regular tax payable is 40 lakh. In the year 2, no. If I compute, if you compute your tax, if you compute your total income and tax on that, regular mode, you have to pay 40 lakhs tax. And in the year 2 also you claimed some 3580 deduction, all that. So AMT provision applied. Accordingly, AMT amount also calculated, 20 lakhs only it came. What department is saying, I want you to pay 40 lakhs. If AMT is higher than normal tax, regular tax, AMT. If regular tax is higher than AMT, then pay regular tax. So you have to pay how much? 40. So, but out of this 40, AMT is how much anyhow in that year? Minimum tax, how much you have to pay to the department? 20 minimum you have to pay at any cost. So 20 you pay to the department by challan. What about balance 20 lakh? I can set off this 20 lakhs liability by brought forwarded AMT credit. AMT credit opening how much? 25 lakh AMT credit is there. I can set off against this 20. So balance 20 only I will pay. Nothing but if any AMT credit I brought forward, that AMT credit can be used to set off regular tax which I have to pay over and above AMT in the succeeding years. So suppose in year 2, AMT amount is 20, regular tax payable 40. Minimum whatever AMT is there in every year that you have to pay department by challan for sure. Excess amount is what? 20. This 20 lakhs you can set off AMT credit. You can set off with AMT credit. That's it. Are you getting the point? With this 115 JEE provision is completely over. Now, this 115 JEE, 18%, 18.5% AMT, all this and all do not apply if adjusted total income is less than or equal to 20 lakhs. If the adjusted total income is not exceeding, if the adjusted total income does not exceed 20 lakh rupee, this 115 JEE AMT provision itself do not apply. Further, AMT provision do not apply if the SSC, it will not apply if the individual or HUF is opting concessional tax under 115 BAC. Suppose if at all you are choosing 115 BAC method of payment of tax, AMT provision will not apply. Suppose you are not choosing 115 BAC and you have claimed 3580 deduction, you have claimed 10AA deduction, or you have claimed heading C chapter 6A income based deduction. Now where is it? For your total income we will add back all that. We again give you depreciation benefit. Balance amount, if it is more than 20 lakhs, then AMT provision we apply. On that total income, adjusted total income, we apply AMT tax rate plus surcharge plus everything. We calculate what is AMT liability. If it is more than your regular mode of tax liability, then AMT, whatever is there, we collect that amount, entire amount. And the excess of whatever the extra AMT you paid, no, beyond your regular mode of tax, that extra amount I will give you AMT credit, carry forward. Succeeding years, you set off with regular tax, full regular tax. Huh? No. Regular tax in the succeeding. Suppose in year 2 you have regular tax. In the year 2 also AMT is there. Regular tax minus AMT is there in year 2. So whatever the extra regular tax you are paying over and above AMT in the succeeding year, that extra regular tax you can set off AMT credit. So indirectly, department, though they gave deduction, they are adding back deduction and collecting AMT, and by carry forwarding that AMT and permitting you to set off against regular tax excess regular tax which you pay over and above AMT in that succeeding year, they are allowing you to set off. No, indirectly 3580 deduction, 10AA benefit, everything is given. Just so that in order to save cash flows, in order to temporarily save the cash flows of the department, they just did this kind of adjustment. So at the end of the day, they are giving. So next 15 years you can carry forward my AMT. Obviously, in the next 15 years, definitely there will be 1 year where I will not have 35 AD, I will not have 10 AA, nothing. So in that year, I have to pay regular tax only completely. AMT is also not there. I can set off this. Very simple. Now, in this, there are some noteworthy points. Now, can I set off AMT credit in this year even though my adjusted total income is less than 20? You can. No question at all. Suppose in year 2, I don't have AMT at all. I have only regular tax. Can I set off? You can set off. Able to understand. Suppose in the succeeding year, I don't have 35 AD deduction itself, everything is not there. Still, you can set off. Once AMT is carry forwarded, you can set off against regular tax payable, provided in that year if AMT is also there, no, that much minimum amount you pay to the department by cash. Extra, over and above AMT, whatever regular tax that you have to pay extra, against that only you can set off AMT credit. That's it. So with this, 115 JEE is completed. Now, in this, no, there is one important question in total income chapter. So I will open and show you. You please solve it. You can download this book from my website. Rest of us CA/CMA, there is a website inside that you can download this book. So in total income, there is a problem. Even in the last attempt, I think May 23, they have given similar kind of question. 220 page. Just a minute. 249 you go. 245. Yeah, this question number 11 is there, no? Every one of you try to solve this particular question. There is a high possibility that a similar question will come in exam. The high possibility. So this itself, if at all asked, no, they'll ask for 14 marks or at least 12 marks they'll ask. Getting it? So very careful. Now, in this question, no, they have 115 JEE, 115 BAC. Everything is tested in this question. Anyhow, I will talk 115 BAC now. So this is nothing but solved workbook in website. In website you can find so in group 1, if you go to rest of a CA/CMA website, CA Intro, inside that group 1, inside that paper 4, inside that income tax workbook, if you click on this download option, you will find that solutions. It's a complete question bank kind of. Next. So that's about alternate minimum tax. Now let's look at 115 BAC. What is this 115 BAC? So tell me, for an individual or HEO, what are the slab rates up to 2 and of 0, 2 and up to 5, 20%, beyond 5 up to 10, 2 and up to 5, 5%, 5 lakh to 10 lakh, 20%, beyond 10 lakh, what is the tax rate? 30%. Now you have another option. Up to 2 and of 0, 2 and of to 5, 5%, 5 to 7 and of 10%, 7 and up to 10 lakh, 15%, 10 to 2 and of. So every 2 and of lakh, 5% tax rate will increase. 12 to 15, 25, and beyond 15, 30%. Generally, in normal mode, no, 30% tax rate will apply the moment income crosses 10 lakh. Suppose here 30% tax rate will come only when the income is crossing 15 lakh. If you want to pay income tax at these rates, these slab rates, not your regular slab rates, but under these 115 BAC concessional slab rates, if you want to pay income tax as per these slab rates, you have certain conditions. What are they? You should not claim leave travel concession deduction. You should not claim HRA exemption. You should not claim 10-14 children education allowance, 100 rupees per month per child for 2 children. Hostel allowance, 300 rupees per month per child for 2 children. All that. Many allowances were there. Only for blind people, 3,200 rupees transport elements they can claim. 1017, MPs, MLS, no, while calculating total income, daily allowances received by them, they should not claim this deduction. 1032, when you're applying clubbing, no, for minor children, for each minor child, 1,500 rupees per annum exemption is there, no, you should not claim that. 10AA benefit, even 115 JE we have seen, first 5 years, 100% of export profit is exempted. For next 5 years, 50% of the export profit is exempted. So that you should not claim. Under 16, suppose if you are a salaried employee, standard deduction, entertainment allowance, provision tax, none of this you can claim. You should not claim all this. 1T4P, suppose if you are having house property, self-occupied property, on that interest on housing loan is there. You should not claim interest on housing loan deduction for self-occupied property. You should not claim additional depreciation, not normal. Normal you can claim. Additional depreciation you should not claim. Donations to scientific research associations, social associations, all that you should not claim. And deduction under 35 AD you should not claim. Family pension deduction you cannot claim. Deduction under entire chapter 6A except 80CCD subsection 2 employer contribution to national pension system. 80CCD subsection 2 employer contribution first treated as salary, then again you can claim deduction. Except that entire chapter 6A deduction you should not claim. If at all you are not claiming all these benefits, if you do not claim all these benefits, your total income normally increases. Entire chapter 6A you should not claim. Sell house property related interest amount you should not claim. Section 16 salaries related deductions you should not claim. 35 AD you should not claim. Additional depreciation you should not claim. 10-year benefit you should not claim. If you are sacrificing all these benefits, then department will give you the option. The department will give you the option to pay tax at these slab rates. Very simple. What is 115 BAC? Normally, at what slab rate you have to pay for? If you are an individual, if you are an individual, compute total income by applying all the heads of income, provisions, deductions, depreciation, additional depreciation, section 16 deductions, all that you apply everything. Compute gross total income minus chapter 6A you claim happily. Compute total income. On that up to 2 and up 0, 2 and up to 5, 5%, 5 to 10, 20%, beyond 10, 30%, normally. But if you want to pay tax at these rates, these are lesser rates, no, concessional rates, no, compared to the normal regular modes of tax rates, these are concessional. In regular, the moment income crosses 10 lakh, 30% flat rate. But here, up to 15 lakhs, you don't have, no. Only if the income crossed 15 lakhs, only 30% apply. If you want to pay like this concessional rate, you have to sacrifice these many. You know what? This is a big failure. This 115 BAC is a big failure. Getting it? In reality, nobody will go for 115 BAC, but still, in exam point of view, this is important. So if you claim all this, if you sacrifice all these deductions, sacrificing all these deductions means what? Compute total income normally. To that, add back all these items. And revise total income you will get. Now on that you can apply these rates and pay tax. This is what 115 BAC is all about. This 115 BAC provision will apply, will be beneficial only for the SSC who don't have chapter 6A, only for the SSC who do not have business income, only for the SSC who do not have who is high paid salaried employee, no deductions at all for him. Only for them this is beneficial. Like that you will find very rare in India. Everybody will have any of the, many of these deductions, many of the SSCs will have. This is a very big failure of the government. One of the failure provision in income taxes 115 BAC, because this provision is not really benefiting anybody. Anyhow, practicality apart, I hope now you understood. What is 115 BAC you understood. So that's 115 BAC. Getting it? So in this many provisions were there, but they were little in depth. Right now it is not required. Now, when you should exercise this option at the time of filing IT return? Suppose you don't have business income at all. Every year, 1 year you may go with 115 BAC, 1 year you may not go with 115 BAC. Every year you can choose. But suppose if you are having business income, once you choose 115 BAC, you have to stick to it. Suppose if you withdraw later, you can never again come back to 115 BAC. So that's about 115 BAC provision. I hope you are clear. So under 115 BAC, you have an option to pay tax at concessional slab rates. When you can pay whatever total income you computed regularly, to that add back all these deductions under salaries, leave encashment, HRA, 1014 special allowances, section 16 deductions you cannot claim, add back all that. Under house property, self-occupied related interest amount, add back. Under PGDP, 35 AD, Contribution to Scientific Research Association 35. Additional depreciation, add back. Under capital gains, nothing. Under other sources, family pension related deduction, whatever you claim, add back. 10AA benefit, add back. Chapter 6A, all the deductions, whatever you claim, add back to the total income. Whatever revised total income is there, on that apply the above slab rates and pay tax. So this is the option given to you. This is not compulsory. This is an option given to you. So in assessment year 23-24, this is called as optional tax regime. In the next year, no, assessment year 24-25. For November 23, it is not applicable. For assessment year 24-25, it is called DTR, default tax regime. So that's it. So that's the difference. That's 115 BAC. Now, in order to understand application of 115 BAC and 10A, 115 JEE together, remember, if you go with 115 BAC, 115 JEE logic itself will not apply. Now, so I have told you, right, this question number 11, which is a comprehensive problem on regular tax payable, alternate minimum tax, 115 BAC, optional tax regime. So all these three put together, there is a question. There is a high possibility that a similar question might come. That's it. I hope you're clear. So if at all, you see any paper, salaries, compute income from salary, assuming SSE has opted for 115 BAC. So when you're computing income from salary, who has opted for 115 BAC, what are all you will not claim? Leave salary, 10 subsection 5, 10 clause 5, you will not claim. 10 13 HR, you will not claim. 16 standard deduction, all the 10 subsection 14 allowances deductions you cannot claim. That's it. Rest all other you can claim. Gratuity exemption you can claim. Leave encashment you can claim. 10 10 AA. Pension, community pension benefit you can claim. VRS benefit you can claim. All that is common. PGBP, normal depreciation can be claimed. Scientific research expenditure spent by the SSE he can claim. Donation to Scientific Research Association he cannot claim. Additional depreciation he cannot claim. 35 AD he cannot claim. Hope you are able to. So that's AMT and 115 BAC provision is all about. Next topic which I will start is residential status. In the residential status, many students have confusion on individual related residential status provision, which I will focus. Okay, take care. So this is a very small video which is purely on AMT and 115 BAC. And you please solve this problem. I'm telling you, you will enjoy like anything. Okay, you will understand the consequences very, very clearly. Take care.